I do believe that we are in just a liquidation that in an asset that moves a lot, if it rallies from here, and let's say it went back to 100,000 by the end of the year, it still would finish up for the year. So I think, again, we're caught in this position where something is now down, 6-7% year to date. And we're all frustrated because this has been an ongoing hood on the market. But if you get through this, I think next year, again, this is about tokenization. It's about the Clarity Act. This is about AI agents. There's a ton of things that are going on. And again, I wrote this and published it in the Substack. And I really do believe that if you look 6 months from now, this sell-off will be looked as something that, hey, I should have just got involved because next year is going to be a great year for risk assets.
Over the past week, the crypto market saw one of its sharpest swings of the cycle as global markets turned risk-off. Fears of an overheated AI boom triggered a broader tech sell-off, dragging total crypto market cap down to about $2.73 trillion. Bitcoin fell below $90,000, wiping out most of its yearly gains, while over $1 billion in leveraged positions were liquidated in a single day. The sell-off intensified on Thursday when Bitcoin dropped into the low $80,000 range in the most severe liquidation event since 2022. Institutional flows turned strongly negative, with nearly $1 billion exiting U.S. spot Bitcoin ETFs in one session. A single large wallet also sold roughly $1.3 billion in Bitcoin, pushing sentiment into extreme fear. A small rebound followed on Friday, but confidence remains fragile. Despite the chaos, macro investor Jordi Visser says this move reflects liquidation pressure rather than a structural breakdown. He notes Bitcoin is still only slightly down year-to-date and could finish the year positive if it returns to six-figure levels. Visser argues that long-term drivers like AI, tokenization, and regulatory progress remain intact, making this more of a reset than a long-term failure.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
What's amazing about this one, and what I think is both surprising but also enlightening, the S&P is still only about 5% off all-time highs. So when we went through this, and you're naming how sentiment in some measures is lower than it was on Liberation Day, yet we're nowhere near that in terms of just the S&P fall. So this has really been speculative retail names, and obviously Bitcoin. These have been the areas. And for everyone who's also lost money in altcoins, this is all of crypto. So this isn't just there. But I will say this. For everyone who's watched me here or on my weekly, I always say the same thing. And I think it gets boring to people, but I really do believe that we will be climbing a wall of AI worry forever. And I really do mean forever. Behind the scenes, as you know, we're seeing speculative names fall off, and I've highlighted that I created an index which had the names that I think were heavily speculated on, that really didn't have any revenues, that were based on things like nuclear, which may be a solution 5 years in the future, but nothing in the near term. And Bitcoin obviously falls into that camp where it doesn't have a normal valuation side to it. So we're at a point where people have basically bailed out for the time being, and they're getting stopped out. And as someone who, let's say, I had some really nice trading profits going this year until recently. And then about 2 weeks ago, I started to increase my, my regular buying of Bitcoin, of which there's always regular buying. Then I started to doing some increased buying below 100,000. So, between MicroStrategy and Bitcoin, they've eaten up a lot of my semiconductor profits and now my Eli Lilly profits. And we're kind of sitting here, and I can feel that the narrative, as prices are going down, I'm seeing more and more panic on the AI side, more and more people kind of beating their chests that this is artificial intelligence unwind and that the bubble is popping. And that's where this is really going to come down to it. I don't hear many people when I speak to them that use AI or that do as much research as I do across kind of what's coming. And I just feel like in a week like this or a month like this, a lot of this is just losses on top of losses. We were going to see corrections. That speculative name basket has given up the entire year, and it was up significantly. Bitcoin's given up the entire year. We've knocked retail out. So I wrote a piece this week that there is light at the end of the turbulence. I wrote one with a similar title back in Liberation Day, and I hate for people to ignore it. But the message is the same, which is when those fear and greed index get to these low levels, my historical kind of belief is unless the economy follows it and goes down like it did after the housing bubble and like that, that's the only way that it's justified. If not, and we're in a bull trend, and I will remind people, every market around the world is up double digits. So even the S&P 500, and earnings growth is happening faster outside the U.S. than it is inside the U.S. And U.S. earnings are growing faster than what the market's up this year. So under the hood of everything, AI is still pushing things forward. We'll find a bottom in 6 months from now. People will look back and really not remember the panic that ensued. So I'm not really that big into seasonality, particularly in the environment we're in, but I do. You did make me think about one thing. So let's go back to the fact that the fear and greed index has gotten down to these levels. And I want to use an analogy for people to understand, to connect that back to what I said, that you're going to be climbing a wall of worry for a long time. Anyone who thought that all of a sudden, the economy's going to get better, meaning everyone's going to be doing well, that doesn't happen in a world of AI. And this is the thing that I've talked about, where the K-shaped economy, if you want to use something, imagine if we didn't have weather cycles, meaning seasons. So seasons, to get back to your seasonality, let's assume it could snow in the summertime. And let's assume we didn't have the weatherman to tell us what was coming. So you drive your car one day, it's San Diego outside, it's 80 and beautiful, and the next day it's 22 and there's 6 inches of snow. With seasons, you get the time to prepare for the snow. You get to go through it. In a world of AI where we have a K-shaped economy, I really do believe the seasons are going to be shorter, meaning they're going to be 1 month or 2 months. And out of nowhere, you can make a bearish argument. And what people have to understand, this fear and greed index is about narratives. You see that in the University of Michigan consumer confidence level, which is at all-time lows. And so I've highlighted before that the all-time peak in UMich consumer confidence was in March of 2000 or December of 99, that period in there, which was when everyone was doing well. This is a very different time period where we have a K-shaped economy. And in a K-shaped economy, it's very easy for people to get negative very, very quickly. When you're very polarized, that means it starts from half the country hates the president. It's a very, very different situation. And I think as long as we're in a K-shaped economy, people have to realize that that situation creates these issues where people can get negative very quickly. And I think AI is forcing this. Exponential innovation did it. And so that's why I keep saying to people, at the end of the day, what'll matter for AI is NVIDIA blew out numbers this week. There's nothing wrong with what's happening with AI. Then you add in that Gemini came out this week, the best model ever. And it's amazing what it can do. You're continuing to make progress. You're going to continue to have profit margins going higher. People just are going to have to get used to this trading activity. And I'll say it again. I think retail is better positioned to deal with this. And I think the crypto space is as well. I looked at the market. I saw it was up, 1.5%. And then about 2 hours later, I looked and I'm like, wow, we're down 1% now. That doesn't happen too often. And then I read this morning and saw some posts on X that went back and highlighted that there's only been 3 other times in the last 30 years that the S&P or the spiders did what it did yesterday. So for SPY to be up over 1.5% and then finish down over 1.5%, there were 3 other times. One of them happened to be the day that I wrote my light in the end of turbulence, which was back in April of this year. And then the other 2 times, believe it or not, were in October of 2008 after Lehman Brothers during the melee. And again, markets rallied from those points both times. Now, in terms of 2008, that was not the ultimate bottom. We continued to eventually fail and go lower. But back then, the economy was going into a recession. And I think that's what I'm going to say is, what that represents to me is, yes, that was a bad sign. And if you're a trader, the way that I start doing things, in fact, I texted you this week saying, I think the bottom's in for Bitcoin. It fell another 9% since I've texted you that. So that was wrong. And again, I think we're in that mode where they're searching for where the pain will be and where we'll get forced selling. When you get into scenarios like that, including 2008, I will tell everyone, until we actually see kind of a, let's say a 4-hour big white candlestick where we are down and we go straight back up, then you look for the retest, and on the retest, you want to see if the RSI divergences are there. And we don't have any signals in that yet, but I think every day now I'm watching for trading signs where I can, let's say, triple the amount of money I'm putting into Bitcoin. And some of the other names, although the semiconductor names and the things I still like for next year, they haven't fallen as much. So really, when you're trying to go bargain hunting right now, aside from Bitcoin, I really can't find anything that I personally want to buy. And that says to me that this has been more of a healthy move lower, not something more panicky.
Jordi Visser emphasizes that this downturn is concentrated, not broad. While the S&P 500 is only 5% below all-time highs, speculative stocks and crypto have taken most of the hit. He calls it climbing a wall of AI worry, where fear comes from rapid change, not fundamentals. AI is compressing economic cycles, flipping sentiment faster than ever. Despite strong results from companies like Nvidia and accelerating innovation, fear and greed indices are hitting extremes. Visser sees this mix of collapsing sentiment and solid fundamentals as a setup that historically signals market bottoms, not top.
We've already had 80% falls in Bitcoin. So let's not stop at 30. It is an asset that historically has been able to lose 80% of its value and then go to all-time highs again, all during its lifespan. So to have 4 of those, that doesn't happen in the S&P 500. And again, there's an element of this of 2 things that I think are important. And this is why I still don't believe that we're going to extend this much further. And I'd like to hear I'm going to ask you a question at the end of this, because I think you'll be able to add some value to me as someone who's looking at data, statistics, and I'm only investing in Bitcoin for one reason. I believe that exponential innovation runs coinciding with it, and that 25 years from now, where AI agents are accelerating what the world will look like in the future, Bitcoin will be a major beneficiary of what's going to happen. So in those 80% drawdowns to get to that level, it was an immature asset. It wasn't very large. It has finally reached a status this year in the crypto entire thing to get up to $4 trillion overall. I mean, it's a real asset class. Here's the problem. The altcoins, most of them, did not get above the highs that were made in 2021 to 2022. And the reason that's important, and I've mentioned this multiple times, and I still believe this to be true, the dot-com bubble left a lot of entrepreneurs with losses. And whenever things would sell off, the hope would immediately turn into despair and a belief that we were going to go through another one. And the pain of that one was so recent that it scared the hell out of people. The VC world is not coming back to crypto because it also has a lot of assets in there. I've talked about the importance of the private market, and we've talked about that OGs are selling, and now everyone that's been moving money for portfolio diversification reasons inside IBIT and some of the ETFs, they're starting to get a little shaky and wonder why they've done this, and they're starting to sell. So the problem is you run into this situation where despite all of the good structural news, all of the innovation news, all of the entrepreneurial hopes, and the administration getting to the Clarity Act, I still believe this stuff is going to be good, but it needs to start holding somewhere in here, and it doesn't have to be a particular level. We could fall 50% off the highs. I remember saying 2 weeks ago, we might get to 80,000. Well, we did. We got to 80,000. I still think there'll be a day when it reverses back higher, and this is where I wanted to ask you a question that I think for the people that have known me a long time that watch us, and probably the people that have known you a long time that watch you, you must have some feeling or insight that there is some kind of forced selling that was triggered by some event. I'd love to hear it, and I'm sure other people would too.
I think the short answer is I don't know, and I don't think anyone really knows. The maybe 2 most credible rumors, if you will. The first is on October 10th, when there was the big liquidation. If people remember, went from like 122,000 to like 106, 108, something like that in the span of a couple of hours. That was the bigger liquidation than during FTX or any of these moments. I think it ended up being something like 19 or $20 billion of leverage. Somebody blew up. Who is it? How much? What is the contagion from that type of event? Right? Kind of what all the something happened on October 10th, which is right about when we went from the top and we've just been down only since then. And so you've got some sort of selling. Now, there are people who will look and say, oh, on Binance, people are selling at 9:30 every single day. It must be some sort of, programmatic suppression, blah, blah. I think that there's a lot of folks who are smart who say, well, actually, they're probably just selling through an OTC provider. The OTC provider is, essentially collecting all of the orders, and then they're executing throughout the day. So I think that there's a blessing and a curse. The people in the Bitcoin and crypto world, they actually understand the technology and the assets really well. They don't have tons of experience in the traditional financial system compared to traditional folks. And so you get a lot of like rumors and speculation and like assumptions and frankly, just like they don't understand how the systems work, which is an overgeneralization. There's some people who do, but for the most part, traditional finance understands it better. So that's one, is there's been a blow up. The second thing is, I don't want to say who said this. I do not think that this is probably the thing, but it was so outlandish that I had to hear more. There's a person in the Bitcoin community who is very well respected who said, well, it could be government organizations who are being told that they need to take any Bitcoin that they have seized or have access to and put it into the strategic Bitcoin reserve. But that means that they would be giving up the value. So if you have, $50 million worth of Bitcoin and they're saying, give it to you, you would lose the $50 million in your like department budget. And so instead they're choosing to sell it so they don't have to hand it over because they get to keep the $50 million. Again, this person does not work in the government or whatever, but like they're in the know, right? And so I don't know where they got that information from, but it was a interesting theory, maybe.
Raoul Pal views the recent crypto volatility as a forced selling event, not a fundamental collapse. He compares it to the 2021 crash when Bitcoin, Ethereum, and Solana plunged sharply before rebounding to new highs. Despite oversold conditions, strong macro factors, ongoing innovation, and active institutional flows suggest a sharp recovery is likely. He advises a long-term perspective, adding to positions during sell-offs while accepting short-term swings. The volatility is tough but aligns with historical patterns, supporting Jordi Visser's view that this is fear-driven, not structural. Do you see this sell-off as a buying opportunity or a reason to stay cautious? How do you manage short-term volatility while focusing on long-term crypto trends? Share your thoughts in the comments. For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.